Welcome to our weekly market review. It's brought to you by ETM Analytics and TreasuryONE. I'm joined by André Cilliers, a currency strategist at TreasuryONE. André, it's always good to start on Monday when the Springboks have won, especially against the All Blacks, and the sun is shining in Cape Town, so we're having a good start to our week. But just some of the topics on discussion today, it's been flickering in the background for quite some time, and it's what's been happening in China. And, it's really since their relatively late reopening following the COVID-19 pandemic, the Chinese economy has really struggled to gain some traction and to get their economy going. It doesn't mean that they're not growing. It just means that they're not growing at the rate that they would have hoped to, likely going to miss the state's 5% target for the year. And it's a spillover of what happened in the property sector and consumer confidence declining. But the real issue is coming in that there's a subdued domestic demand, and that's been weighing on commodity prices. And for countries like South Africa, that is a speed wobble.
Yes, and I think I have mentioned this so many times before. If there's going to be proper growth out of China, it will be export-led. And people will only buy from China if their economy is growing. So we need world growth. The Chinese economy will be struggling simply because for years they threatened people with death if they were to have children. Now, if you don't have children, then your population is not growing. If your population is not growing, you're going to have a hell of a problem stimulating your economy from a domestic-led consumption point. So, and I've mentioned this before, you can't keep demographics out of the equation when you look at countries. We've had that in Greece. We've had that in Japan. We've seen that there. Way back when we had the massive problems with the Greek economy, I spoke about, old age homes. Japan's an old age home. We know of the problems there. China is not an old age home because they're allowed to have children now, but they weren't allowed. So that will take a while for that babies to grow up and actually spend money. But if I look at the graph, it's haywire because they keep missing it. They've got problems in their property sector. They've had massive growth at one point in time. People bought houses. The construction industry was booming. And that's now, that chicken is coming home to roost. So more manufacturing, more people in jobs, more company profits will put people in jobs when their manufacturing increases, but that's export-led. We'll get to that a little bit later.
Yeah, so, when we read about it in the media, you see these, China's economy is in a crisis, and you would think that the China's economy is, heading for a complete crash. And these are definite red flags, but we should just be careful and always remember that it's a behemoth. It's a massive thing. So it's still growing, just a lot slower. And obviously countries like South Africa and all the other commodity-centered economies are feeling the pinch. Moving to China's almost nemesis on the other side of the world, it is Labor Day in the US, a public holiday. And speaking of which, US labor data will be out later this week. We are expecting the non-farm payrolls to pick up slightly in August. And I think everyone has agreed now that, we've spoken about it so many times that the rate cuts have been priced in for September. So this data will likely just be analyzed, I would think, to gauge whether the Fed has just done enough to avoid a recession, or at the very least, to avoid a deep recession.
Yes, just a quick return to China. We should not write them off.
Yes.
Next door to them, there's India. Figures out of India is looking better and better and better day by day. They will buy from China. And if we now go back to America, what's happening there? Jobs data, inflation, non-farm payrolls. These things simply tells us that the economy is not as well as they were hoping. It's also not as bad as people were wishing for. So a soft landing, in other words. Data shows us that we can expect the Fed to cut interest rates in September. Mr. Powell had said the time has come, and I think the time has come. Last week, we cautioned people by saying optimism about 50 basis points, etc. I said, and we agreed, that it's most probably not 50 basis points. It's 25 basis points. And I've spoken about Dricus du Plessis fighting for 3 rounds, not stuffing it up in the 4th in a boxing match and all these things. Same with the Fed. They're not going to stuff it up right now. They're not going to stop their fight against inflation, but they're going to make damn sure that the economy is getting a soft landing and that it doesn't go into recession with the higher rates. So look at 25 basis points and look at a start of a world economy that could start growing a little bit better than it did in the last couple of months. Also here in South Africa, we could see interest rates coming down. Worldwide, we can expect that. And that will lead to consumers doing better, having a little bit more money in their pocket, spending a little bit more, and that will then aid world growth. And now we get back where we started today, China. And I mentioned India, but if the rest of the world starts growing as well, they will benefit from that. Their inventories on commodities will come down because they'll start using more, and it could just generally be good for the rest of the world as we get this increased international growth.
You mentioned now that we cautioned last week about expectations of a 50 basis point cut coming from the Fed in September, and we're actually seeing investors scaling back on their Fed rate cut expectations, which has prompted some support for the dollar that it's to regain some of the lost ground. And I know there's a bunch of Q2 data coming out domestically this week, but where will the Rand take its direction from for this week?
The Rand will take its direction from what's happening, and with what we've just said, the Rand will take its cue and it will stay calmly and very easily within its band, 1750, 1850, trading at the 1790s, 88 levels now, so comfortably above the bottom, comfortably below the top. So it's going to remain there. And without any major hiccups or anything happening. A peaceful, quiet trading range for the rest of the week before we speak to people again next week. And we'll most probably repeat the 1750, 1850 next week as well.
I'm okay with that repeat. But yes, André, we will chat again on Monday, and hopefully it will be another good Monday with another Springbok win and another sunny day in Cape Town. But we will catch up again. Huh?
If I were to conclude and we look at the Springboks and we speak about 25 basis points, 50 basis points, it's very much like a Springbok All Black rugby game, this one. Will we win? Will we not win? But at the end of the day, we will win and we will be correct with our 25 basis points in world growth.
Good. Okay, André, have a good week.
Thank you.